Yes, okay. Good afternoon to everyone, and thank you for joining this series of webinars around business development. I'm John Miller, Director of Delta Channel Services, and you'll see the title of today's webinar is called Developing Your SaaS Business in 2014. What we want to cover today are some initial introductions to you, the audience, and explain a little bit about where we're coming from, and then really focus on what we have identified as being 20 critical success factors to build a profitable SaaS business model. We're going to put a particular slant on what we think is happening in 2014 and the areas to focus. Obviously, some of the success factors will be the same year on year, and there will be a different emphasis. Also, towards the end of the webinar, there will be an opportunity for any questions and answers. So I think most of you are familiar with the sort of go-to-meeting type concept. There's a chat box there, so if you want to send any questions in to Charles Hurst, who's our facilitator this afternoon, please do so. We'll also be sending you a copy of the charts because, as I said, we've got a lot of material to go through rather rapidly. So in terms of basic introductions then, just a very quick word about Delta. We've been around since 1995, focusing on helping software companies in business development. I think the audience today is a fair representation both of the market and of some of our clients. So they include global players like SAP, Oracle, HP, IBM, and so forth, right down to some very small startups. We're engaged with some companies who clearly out of the garage or out of the bedroom, but really starting to make their first steps into the market, and indeed others who are making their first steps from the US into Europe or from Europe into Asia Pacific. So necessarily some of the things that we talk about today will be somewhat generic, and I think the first takeaway by the title of the discussion is there is not one silver bullet. In fact, we believe there's at least 20 silver bullets that we should be looking at. So I'm just going to touch on one or two that I think are more topical right now. We're also assuming that in the audience today, most of you have developed or are about to release some form of SaaS-based solution. Many of you might be moving from on-premise to a SaaS model subscription service. Some of you may be starting from scratch, have no legacy data, no legacy customers. Most of the comments we're going to make this afternoon apply from whatever your start point may be. I'm not going to talk an awful lot about analysts. I know there's some bigger companies on the webinar today that I'm sure subscribe to Gartner and Forrester and IDC and the rest. This is just a little extract that we actually put forward right at the end of last year to two important points here. First of all, people still get very confused between cloud, subscription, software as a service. There is a direct relationship between the two as the market develops. And clearly, as people become more familiar, more comfortable with the use of cloud, SaaS is a very close relative. So these are some interesting figures from a company that we were working with that was very focused on the public sector, who are usually seen as laggards. I think you can read for yourself the data that says that actually the adoption rate of cloud is significantly higher than people would have expected at this stage in a developing market. It's also true, I just picked this up last week from Computer Weekly survey. I think it was actually run by Gartner, but they were saying that the number of CIOs who in 2014 will consider a SaaS application acquisition has moved from 17% to 31% in a year. That's a very, very significant jump, I would testify. And as I say, I know a lot of you have got access to this data, and we know historically a lot of the analysts are very accurate with hindsight, but they are optimistic. We prefer to get our intelligence and data firsthand from the market, and I was talking to the MD of a UK-based ISV who launched some SaaS products last week. He dropped me a note, and this was sort of not requested, but I've copied this verbatim, and you'll see he's made some great statements there. Since our SaaS launch, we haven't sold a single perpetual deal, which may not always be good news, yeah. But they're recruiting new customers at what he calls an astonishing rate, far quicker than we ever did before. And you know, some of the very obvious benefits with this, the small footprint up front, minimal investment, and you know, sign off by one person, avoiding committee decisions. This is a relatively small company, and certainly the vibe seems to be for small to mid-sized partners. They can make very rapid progress with SaaS applications, you know, the land and expand type theory. So we're seeing an increasing number of people who are having good experiences. However, as I'll come on to this, there are consequences later, and that's why I've selected the 4 silver bullets that I want to talk to today out of the 20, because people who are planning or are launching in 2014, I'm sure will inevitably come across some of these 4 silver points. Don't just take our word for it. Good old cliche, the Americans are coming. We've got a very strong relationship with expert consultancy and research company called Montclair, who are based in Oakland, California. And this is data that they've collected of private funding investments in the last 4 months. So you will see there's any number of names there. I dare say many may be new to you. And the funding, the private funding, has been ceded to these organizations because clearly people are expecting rapid growth and fast returns on this investment. And we're seeing this as a scale and a standing that we've really not seen since the dot-com days, you know, going back to the late 1990s. So, you know, people are putting money where their mouths are. Next point down, also from Montclair, and I'm going to talk a little bit more about them later. They do some very in-depth profiling of growing SaaS companies, both large enterprise and startups. What's also interesting is the growth rate across all the different application areas, you know, areas that you may have, or, you know, if you go back 3-4 years ago, the wisdom was no one would trust their HCM talent management solutions to the cloud or off-premise, and we can see there that many of the leading 250 companies are exactly in that sector. You know, same as we know that there's been market leaders for a long while. You know, with Salesforce.com around CRM, ERP coming through strongly. So to an order of magnitude, we're seeing it across many industry sectors. And in fact, I was at an industry dinner at King's College, Cambridge, just the other week, which was focusing on the manufacturing sector. And again, you would have expected that people who are in the design arena, concerned about IPR, would find difficulties perhaps embracing SaaS applications. Again, not so. So in terms of all the pointers for 2014, we're seeing, if anything, perhaps stronger growth rates, better adoption, better understanding than we had thought. So it's going to be a good year for those of you who are in or on that journey. That said, these 20 critical success factors still apply. As I said, I'm going to select 4 of them to talk to in some depth today, but the message still is that if you want to be successful and have a balanced growing business, you need not just only to address each of these factors, but you need to have a balance there. And I'm just going to very quickly drill down and show you how over the last few years we've been collecting industry benchmark data, because this is a new industry, right? And it's very hard to benchmark to say how are you performing, for example, in developing your 80-20 function value ratios compared to your customer expectations, compared to your competition. So we've focused on the last year or two to actually get some objective data rather than, analysts are very good at generic trends. Here we're trying to drill down for individual vendors, for individual applications, and really understand how well they are performing against best practice and what they actually then need to do to improve performance to close that gap. So in this very quick snapshot, you will see in this particular exercise for a PLC, we engaged with 20, 30 different people and customers and partners, and we looked under the functional headings, and there were any number of disconnects in terms of how they were performing against where they thought they were at and what they needed to do. Another great quote, actually, if I may, going back to that managing director that was saying how well his SaaS business had taken off. He said, the one thing I did not realize at the beginning was that the transition to SaaS would impact every single part of my business. And it is true, it's like dropping a stone into a pond. So having the world's best product or the world's best marketing without having the other areas interconnected will still leave you lagging behind. So the summary of that section is, if you've not got all of those 20 silver bullets in train, in development, if you've not got ideas of benchmarks and what you're trying to achieve and how you're performing against best practice and competition, then you should do so, and you should be measuring. I mean, that's just common business sense. I wanted now just to jump on to 4 of those silver bullets in some detail, because I think they are particularly relevant in 2014. So forgive me if I flick through a number of these charts. We will send you a copy of those to follow. So the first one is necessarily cash flow. We've seen it on a number of occasions. Unfortunately, we've witnessed a number of rapidly growing SaaS organizations who have died a death, who have died of cash flow starvation, either because the VC has turned the tap off and they've run out of funding just at the point they've launched or very shortly afterwards, or because simply they haven't adjusted what I call the triangle of transitioning existing customers from on-premise to SaaS. They've got the carrot-stick pricing strategy triangle wrong, and either way they've then been left with supporting an old product, a legacy product, and a new product with all development and marketing costs concurrently. So you will see some of our adages here. The simple acid test is, you get half as many sales as you expect in twice as long, can you survive as a business? And there are any number of strategies and approaches that need to be adopted to ensure that you can get across this valley, and indeed that your financial models are accurate, realistic and sensitive. We see far too many unrealistic forecasts in terms of growth and demand. So cash flow going to be very hot again in 2014. By the way, not just for vendors, managed service providers, hosters as well. Another one I want to come on to, a bit out of sequence, is time to market. Absolutely vital. We've seen it in so many situations. One of the things which is really an own goal that we've seen is when organizations don't get their own act together between the development teams, between marketing, between sales, in terms of what are they trying to produce. Is it an apple? Is it a banana? What will customers use? What will they pay for? And we've seen too many times a situation where very late in the day there's been changes in the decision of what they're going to be able to release and when it's going to be released. And this comment here about a company called Unthink that we tried to help a couple of years ago. They had a great idea. It's a rival to a Facebook. Someone's got to come up with it, right? But they were so late getting to market that they couldn't be clear about the audience and the development, and basically ran out of cash. So time to market. On the back of that as well, I would just touch on another one, We were talking to a US company just yesterday, actually, that was keen to get to market very, very quickly and believed that the solution was to outsource development as much as possible, offshore as quickly as possible. And we said, yeah, that's great if you've got deep pockets and a lot of experience of doing that, but if you're a mid-sized company and it's your first entree into offshore development, beware, first of all, there are many issues and obstacles out there, and also be aware that there are now other viable options around creating your own resource centers. So that means your own people, your own team, ultimately, if you so desire, your own office, your own company offshore. Reason why that's valuable is obviously it reduces your overall cost, it reduces your time to market, but also it gives you increased asset value and ability to scale much faster. So, you know, if you are today using large elements of subcontracting, consider own resource centers, not just for development but for test and support in the future. Going forward to another one, again a conversation that lasts all of 2014, we're not very far into the year, about export markets. A company came to us who had been successful in the domestic market. Again, we've heard this so many times, had a 3 to 5 year exit plan, but had only sold directly in the home market, realized there was a great opportunity in English-speaking countries, and needed to put together a strategy to get to export markets quickly. And that's one of the great advantages of SaaS. It gives you a global platform immediately. So we would again encourage anyone, wherever you are on that journey, to look at the opportunity to get into export markets concurrently. Size doesn't necessarily matter. You know, we've talked to some very small companies based in Switzerland with less than 20 employees who, in this particular example, rather than going to the obvious Germany or Austria, went straight to China. Why? As you see there's lots of English-speaking people. And also beware, you know, it's interesting, we had a major UK client that was looking to go into the Indian market because they had large market penetration, but it looked quite an old legacy solution. They were looking to go SaaS, unaware that in their target market in India that there were people who had got very sophisticated SaaS solutions. Why? Because things like infrastructure, 4G, mobile are more pervasive out there. They were actually looking to come into the UK market. So you know, beware. It's a two-way street. So certainly would, you know, advocate those four topics as being the hot ones for 2014. Cash flow in terms of your growth rate and transition rates, your time to market, looking at how you can reduce your costs, and I'd say the fourth one I'd call out is your ability to scale. And for those of you who you know, are stakeholders, shareholders, or just interested in driving the value of your stock, you know, the quicker you can show that you've got a scalable model, both by geography and by vertical market, the more asset value you're going to put into your organization, whatever you're going to do with it in the longer term. And, you know, we would certainly advocate that SaaS at the end of the day is business development. It's a new type of model which gives you different opportunities, different rules to the game, but certainly for those that play all these 20 success factors in the right way, a very, very rapid road to riches or to ruin. I'm just going to skip through some of the other 20 points. As I say, we're not going to have time to cover them all today. You know, there's some fundamental ones about security, ISO 27000, legacy data that we've touched on. We've seen some very large brands having to withdraw their initial market offerings because they haven't got good solutions for integrating legacy data. We've had people, for example, not understanding the impact on commission plans, compensation schemes for partners. Here's another one as well, around metering. You know, we talked very early on to really understand what your customers are going to use, what they're going to buy, what value they're going to put onto it. One of our very early clients moved to a subscription model 6 or 7 years ago, but when they so they had a way of licensing individual modules on an annual basis and so forth, away from perpetual. But the reason they did that was so that in their first generation SaaS solutions they could build in very accurate metering, so they could absolutely understand who was using what, and they said it's the best sales tool they've ever had. So you know, metering links back to the cash flow, links back to time to market. I haven't got time today to talk about you know, your selection of infrastructure platform partners, but there's an awful lot to the success of that. Here's a quote I put at the bottom, actually, made by Gartner in 2013. 20% of IO infrastructure outsourcers will be out of business by 2014. I don't know if they're going to update that, but we've been certainly aware of platform partners who have hit financial problems. On the other hand, we've been aware of selecting platform partners who have been able to open many doors and many opportunities for the right application. So there's a whole silver bullet in this area that really needs to be run through. Coming to the end then, as I say, I want to leave a little bit of time for some questions and answers. There's a complete list of 20 which we will send on to you. Just some thoughts from us before we go to a Q&A. I've gone through at high speed a whole raft of different issues and factors. We have got, and Charlie will be in contact with you, a way that you can do a self-assessment. If you want to, we can do a deep dive and see how you perform compared to you know, industry best practice, and help you identify the areas where you do need to accelerate and improve. Excuse me. I also paid reference to our partners based in the US, the Montclair 250 report. This has been running for a few years now. It's a great source of information. They are developing a new version which is going to be due for release in Q2 of this year. It goes into a lot more depth in terms of profiling the industry, profiling trends, and also profiling companies right across the spectrum, from the large global enterprises to the startups. They're also putting a lot more focus on European and Asian players who are coming into the market. So if you've got some interest around that, then there's two thoughts for you. One, they are still open to and still profiling companies. So if you think your organization is one that could or should be included in the SaaS Global 250 report, do let us know. Also, nearer the time, if you are interested, this year's report will be available for purchase, and we can send you some marketing information on that in terms of the sort of subject matter and cost. But if you're in this game, I think it would be a very wise investment. And the final thing to say, in terms of where we may be able to help you, first of all, to have a much more in-depth conversation on some of the many topics I've touched on today, but also we offer some execution support services. So practicing what you preach, if you want to get into exports faster or build your own resource centers, or just vanilla marketing in 40-odd languages, we'd be very happy to help you. So Charlie, I know I've charged through at high speed as ever, but on my watch we are coming up towards the half hour, which is what we said we'd try to do. I don't know if there are any questions, Charlie, or I've a stunned silence, or any questions now, but please open mic, or over to you, Charlie.
Thanks for that, John. No, we don't have any questions currently, but any of the audience can obviously send in their questions to me, and we'll get those answered for you as quickly as possible. So,
Cool.
so thanks very much,
Okay.
everyone, for attending.
All right. Well, thank you, Charlie. And as I say, I'm sure you'll send on an information pack to everyone that's attended, and look forward to those of you who have joined us throughout to having a discussion in the future. So thanks for your time.